Beneath the South China Sea, a $26 trillion treasure of oil and natural gas lies within reach of the Philippines. For a nation of over 115 million, this is not fantasy. Geological surveys confirm the reserves are real and vast. This wealth could end energy dependence, fuel economic growth, and lift millions out of poverty. Imagine a Philippines powered by its own energy, with stable fuel costs and resources to invest in infrastructure, education, and healthcare. The reserves are worth more than 60 times the country's annual GDP, enough to fund a national transformation. But this promise comes with immense challenges: geopolitical conflict, legal disputes, and technological hurdles. The South China Sea is one of the world's most contested regions. Realizing this dream will require political will, clever diplomacy, and strong international partnerships. The story of the Philippines' oil and gas jackpot is not just economic, it's about sovereignty and the nation's future. The stakes are high and the outcome will shape generations. The question: can the Philippines unlock this fortune beneath the waves? The heart of this wealth is in the West Philippine Sea, especially the Reed Bank and Spratly Islands. These deep-water basins could hold reserves far beyond the Malampaya gas field, making them the country's most strategic asset. Seismic surveys and geological studies by local and international firms confirm the potential. If tapped, these reserves could meet domestic needs for decades and turn the Philippines into a major energy exporter. The location is both a blessing and a curse. It's at the center of a heated territorial dispute. The Philippines' claim is clear under international law, but it's aggressively challenged by a powerful neighbor. The dream of energy independence is tied to the nation's ability to assert its rights in these contested waters. Here, geology meets geopolitics, and the stakes couldn't be higher. The Philippines' claim is grounded in international law. UNCLOS grants exclusive rights to resources within 200 nautical miles. The Reed Bank lies well within this zone. In 2016, the Permanent Court of Arbitration ruled overwhelmingly in favor of the Philippines, invalidating China's sweeping claims. This legal victory affirmed Manila's rights, but China rejected the ruling and ramped up its presence. China has built artificial islands and militarized the area, turning parts of the Philippine zone into forward operating bases. Chinese Coast Guard and maritime militia actively block Filipino access, harassing fishermen and survey ships. The risk of confrontation is constant, making energy development nearly impossible without triggering international incidents. The legal win is powerful, but enforcement remains the challenge. The Philippines faces a daily struggle to assert its sovereignty. Under President Marcos Jr., the Philippines is strengthening its alliance with the United States, pivoting away from Beijing. The Mutual Defense Treaty now explicitly covers attacks on Philippine vessels in the South China Sea. The U.S. seeks economic benefits in return for security, potentially giving American firms stakes in offshore energy projects. In exchange, the U.S. Navy would protect drilling operations from Chinese interference. This model is attractive. The U.S. secures energy, the Philippines gains a credible deterrent. Manila is also building partnerships with Japan, Australia, and the EU, forming a coalition to support its maritime rights. Joint naval exercises and diplomatic backing aim to create a stable environment for development. The Philippines is leveraging alliances to push back against China and unlock its resources. The need to develop these resources is urgent. Malampaya, the country's main gas field, is running dry. Without a replacement, the Philippines will rely almost entirely on imported fuel, exposing it to volatile global markets. Higher energy costs would hurt households, drive up inflation, and threaten economic stability. The government is acting fast, amending laws to attract foreign investment and technology for deep-water exploration. Major investors like Indonesia's Pertamina are already entering the market, signaling growing confidence. Foreign capital is essential. The Philippines lacks the resources and technology for deep-water drilling alone. The clock is ticking, and the nation's energy future hangs in the balance. Developing the Reed Bank is not just an opportunity, it's a necessity. The path forward is fraught with risk. China's challenge, security threats, and the need for foreign partners. Military modernization and strong alliances are essential to protect drilling operations. Past joint ventures failed over sovereignty disputes. Now, the focus is on creating a secure, attractive environment for investors. The US, Japan, and Australia provide a protective shield, making commercial activity possible. The government must turn diplomatic support into real security guarantees to attract energy giants. If successful, developing these reserves could transform the Philippines, fueling growth, funding infrastructure, and securing prosperity for generations. The stakes are enormous: energy independence, economic modernization, and a sovereign wealth fund for the future. This is a high-stakes drama of ambition versus reality. The decisions made today will determine if the $26 trillion jackpot becomes a foundation for a new Philippine century, or remains just a dream. The world is watching as the Philippines navigates this perilous path to prosperity.